Hi, welcome to this video today. What we're going to be doing is getting some Forex trading advice from one of the greatest traders of all time, a guy called Larry Hite. The advice is to do with risk control and basically maximising profits. Now, for those of you who don't know who Larry Hite is, he's basically considered one of the great traders of all time. He set up the Mint Fund back in the 1980s, and it soon had a reputation for offering exceptional returns. But even better, it had very little drawdown. I can remember in the 90s, it was already a massive fund, referred plenty of investors onto it. They were all very happy with their investment. In fact, today, Mint is still going, and it is the largest hedge fund in the world. So over decades, with all the changes we've seen, it is still there, it's still making money. And in terms of Larry Hite, I read an interview with him in Market Wizards. I think anyone who watches me regularly knows that Market Wizards is one of my favourite books. And I found the article with Hite really interesting. There's one point that he made that really made me think, and it was to do with the MIT blackjack team. If you remember those guys who went to the casinos and tried to card count. And Larry Hite was talking to one of these guys, and he was saying that they were not welcome. The casinos do not want card counters. They've got an edge over the casino. And he contrasted this with the markets. If you take the Forex markets, for example, you can get an edge over them. However, you can come and trade whenever you want. The market doesn't care who you are, your educational background, your age. It just doesn't care. But if you do your homework, you can come in and you can trade with an edge long term and you can win. Now, in terms of the trading tips in this video, a lot of them are to do with risk control. Now, a lot of traders who come in the markets don't really consider risk control and money management. It's too boring for them. They just want to focus on the gains that they can make. They're basically gambling. They're there for the thrill and the excitement. And I quite like that quote on the way in from Larry Hite, where he actually says, I play to win. I'm not here for excitement. I think that is true of all great speculators, okay? You're not here for fun in the markets. You're here to win. Now, what I want to do is just now go through some quotes from Larry Hite and some tips in terms of limiting your losses and maximising your profits. So here's my first quote, and I'll be back in a moment. The truth is that while you can't quantify reward, you can quantify risk. Now, we'll come back after that short quote, and while it is a short quote, it's one that is very important that anyone coming in the markets understand. Most traders do not understand that quote. They come in, they're too focused on profits. They set objectives of how much they're going to make, but that's just an opinion. You cannot quantify what profits you're going to make in the market. The market may get there, it may not. But what you can do for certain is quantify how much risk you have on a trade. And you can do this by just setting a stop loss where you are wrong. And I think, if you think about Mint, I just said how successful it is, and it has been for many, many years. One of the philosophies of the fund is not to look at how much profit they're going to make from a trade. It's how much are they going to lose if things go wrong. They're after the best risk to reward trades. Now, over time, statistically, they're trend followers. They know that their winners are going to cover their losers, but they always start from that standpoint of how much are we going to lose. Now, I don't know how many times over the years I've spoken to traders, and they might have been doing well or not so well, but then suddenly they'll have a big drawdown. When I'm saying big, it'll be something like 50%. And when you ask them, did you know the risk in advance? Did you calculate how much you're actually going to lose? Most of the times they hadn't done it. You have to come from the standpoint of things going wrong first. Now, you have to basically understand you are dealing risk. That is what the markets are, okay? So you actually have to have a cut-off point. And one story that Larry Hite tells in relation to this is with a coffee trader he met in London. Biggest coffee trader in the world, invited him to his house, huge house, massive library of books, guy was extremely knowledgeable, takes Larry Hite out to dinner, and he actually said to Hite, how come you make more money trading coffee than I do? I know all the ministers in the country, I know where the boats are, I know all about the plantations. And Hite turned around, he goes, I don't know as much as you at all. I don't even drink coffee. I manage risk. And the guy kept asking him, well, what actually do you do? He goes, I manage risk. Now, in terms of a chart, a chart has a huge advantage because you can always find good entry levels and exit levels when you are wrong. Anyone can do it. You must do it. And you must come from the standpoint, in my view, of thinking about the risk first of all. Now, in terms of the Forex industry and the brokers out there, they will actually encourage you not to focus on the risk. Now, there's a big myth about Forex markets, in my view, and that's they're highly volatile. No, they're not. They're not volatile at all. They hardly move most of the time. The only thing that makes them volatile is leverage. If you look at any broker today, or most brokers today, you can probably get leverage of 100 to 1 or more. I can guarantee you that if you trade with 100 to 1 leverage consistently, you will wipe out your account pretty quickly. Now, of course, a broker wants you to trade, and if it's a market maker, they don't care if you get wiped out. But you don't actually have to be in the trap of believing the huge easy gains quickly. On very low leverage, you can actually make a lot of money. So you have to use sensible leverage where you can control your risk. Let me give you an example. Let's say you're trading an account of $2,000. What you would do is you would calculate your risk against your lot size, okay? So let's say you've got $2,000, you want to take a trade. Let's say it's a 0.1, i.e. 0.1 of a lot, $10,000, buck a pip, and you've got 150 pip stop loss. You've got $150 risk on your account, okay? That's a reasonable risk on a $2,000 account. You don't want to be too much higher than that. Now, in terms of, when I speak to most traders who've got accounts of around $2,000, they might be trading 0.5 of a lot or even a lot. That is crazy. You actually have to keep the leverage down. Typically, on a 0.1, if I was risking $150, I'd be looking to make somewhere like $300 to $500. That's quite a decent gain on a small account. I'm only using very small leverage. So always remember that. What you need to do is you need to play great defense first. If you look at any great football team, be it American football or English soccer, you'll normally find that the best teams have a fantastic defense. Okay, so that's what you need to do in Forex trading. You need to think defense before offense. Okay, now in terms of the markets and trading them for profit, obviously you want to trade with an edge, and you have to work that out, and you're basically very, very confident in your edge. And if you keep applying your edge, you will come out on top, okay? There's an old saying, it's Scottish: if you mind the pennies, the pounds will look after themselves. Now, you will get, winners, trends that cover your losers. You just need to make sure that you think defense first. Now, let's move on to some other tips about maximizing profits from Larry Hite. And I'll be back in just a second. Just another quick quote. The speculator can choose to only bet when the odds are in his favour. That is an important positional advantage. Frankly, I don't see markets. I see risks, rewards and money. I'll come back off those two short quotes. Let's take the first one. Essential advice for any trader, in my view, and it's advice that most traders don't think about. They want to come in the markets, they want to force profits, and they want that thrill and excitement of trading. They also equate trading more with making more money. Nothing could be further from the truth. Over trading is a major problem for most traders. You don't have to trade. You can sit, wait, be patient, and only trade the trades you're really confident in that offer you outstanding risk to reward. You're not in the Forex markets to have fun, excitement. You're here to make money, in my view. So I think, just keep the trading frequency down. So how often do you need to trade to make decent money in Forex trading? Well, if I was to take my sample $2,000 account earlier, you could make a lot of money trading just maybe once or twice a week. Now, obviously, your trading systems vary, but I'd say that is probably the most that you should be trading. Now, I think in terms of Mint, why it's been so successful over the years, it's a managed fund that isn't focused on making money from trading income in the markets. It's very slanted towards a fixed management fee and an incentive fee, which means its incentive is actually to make money for the clients. Now, I just want to dwell on this point because a lot of people come in the markets, they're intimidated by the so-called big boys, all the big hedge funds and banks. Now, the fact is, they don't do very well, and you can beat them easily. Now, there are exceptions, like I've said, like Mint, but they're few and far between. If you were to look at managed fund indexes, try and find a fund that has made more than 10% for 5 years consecutively, and you'll struggle. You'll hardly find any. Now, the reason they don't make money, the majority of funds, is they're too focused on making money for the institution, in dealing fees. So they overtrade. And you don't need to do that. I've said that as a speculator, you don't need to do that. You can make more than 10% per annum and beat the majority of managed funds. The key to doing it is very much related to not trading too much and just having a very simple, robust system. So I think, it is advice that most traders just don't heed. If you actually understand why you shouldn't be trading frequently, you basically have a head start on your way to profits. As we say in trading, the best trade most of the time is no trade. Patience is a virtue. Now, in terms of the other quote, I don't see markets, I see only risk, rewards and money. That's very true. If you take Mint, reason it's very successful is the same systems trading all markets, and it trades a huge variety of markets. It trades commodities, it trades Forex, it trades stock indices, it trades bonds, and the sheer variety of markets it looks at means it can always hunt out the best profit opportunities. Most Forex traders don't believe in looking at a lot of pairs. They will just focus on a few majors. That's a huge mistake. Let's say you're looking at 5 or 6 major pairs. Expand it out. Get some crosses in your portfolio and some of the minor currencies. Look at about 20. I think that's a good number to look at. Won't take you long to do it. And you will increase your profit potential dramatically. Keep in mind, it doesn't matter what the pair is called. You're interested in the chart formation. The more pairs you look at, the more opportunities to find those really fantastic, high reward trades with good risk. So, it's a simple tip, but again, most traders just focus on a few pairs. Now, another key element in terms of Mint's success has been it's very aware of correlations and not having too many trades in the same area. And Forex traders actually trade correlated pairs and expose themselves to too much risk. Let me give you an example. While I'm making this video, the commodity currencies are generally falling. Now, as a Forex trader, you wouldn't want to be trading USD, Australian dollar, USD Canadian dollar, and USD New Zealand dollar. They're correlated. They're all probably going to move the same way. Now, they could give you a big profit, but they could also give you a big loss. You want to think risk control first. So you probably pick the best pair out of those threes. And then if you want to trade another pair, trade an uncorrelated pair that isn't going to move in the same way. So always beware of correlations. Now, in terms of Mint, Larry Hite makes the point, they weren't interested in developing the best system, perfect system at all. They just wanted a hardy system that gave them an edge. And their systems are quite simple. And what they rely on is basically trading the odds, trading probabilities. That is the key to success in trading the Forex markets. You don't need a complicated system. You need to trade with the odds on your side. You need to think risk control first. Yeah, if you're always, knowing what the worst situation is going to be for you and you're comfortable with it occurring, things can only get better. And there's many different ways to make money in trading, but every great trader will stress the real key is having good money management, and Mint has got fantastic money management. So I think reading up on Larry Hite's view of trading should be on your list of things to do. Most people find risk management boring. It's actually quite exciting, because if you get the risk management right and you've got a simple system, you can make a lot of money. As I said earlier on, if you mind the pennies, the pounds will take care of themselves. You might have a lot of small losses, but you'll certainly hit some great profits to cover them. So thank you for watching this video, and if you've got any questions or queries anytime, feel free to email me. Take care, have a good day.